Well, the first name you're not going to fuck up. No way.
Vinny.
That's
Cousin
easy.
Vinny.
Yeah, that's not going to be a problem.
Bharara.
Bharara. Yeah.
Hello, everybody. I am Jason Trost, the host of the Business of Betting podcast. I am joined today by Vinit Bharara. Did I get that right? Bharara.
You did get it right.
Bharara.
Nice job. Nice job.
Who is the co-founder and CEO of Mojo. Super excited to talk to him. He's created a lot of buzz in the United States. Before we get off to that, I have to say I'm a huge, huge fan of your brother. I imagine a lot of people are a huge fan of your brother. For those of you listening that don't know or recognize the way I butchered their last name, his brother is Preet, who is the Attorney General, District Attorney of the Southern District. What was his exact title?
Yeah, he was the former U.S. Attorney for the Southern District of New York, which he would call, like the sovereign power is what he would say, which is Billions is, I think, still based in part on that figure, the U.S. Attorney.
And I think about your brother every time I watch that show. And I went to I think your brother had just released a book. And
Doing Justice.
Yes. And I went to a chat with him and Jeffrey Toobin in LA. And he talked about his brother who founded diapers.com. And he was so proud of you. I could tell he was just really chuffed. And I thought that was so nice to see. So very big fan of your brother. He sort of reminds me of West Wing. When you watch West Wing, you're like, God, I wish people like smart who gave a shit about the country, the rule of law, like balance of power, all that kind of stuff were actually running the country. And your brother's an example of somebody who has all those sort of Aaron Sorkin West Wing qualities and a public servant. So a very hats off to him.
Yeah, great. Thanks. I'll tell him you said that.
So how did one brother become a leading attorney general? God, I'm very political. I don't know why I keep calling him attorney general. District attorney. How did one brother become a very famous district attorney and the other brother became a very famous entrepreneur? Like it seems you're both very good in your fields, but they're very different from each other.
Yeah. So he's the U.S. attorney. To your point, a lot of people, you're not alone in getting the exact title.
U.S. attorney.
U.S. attorney, but it's very common. Very common mistake. That is not something to be embarrassed about. Very common. In fact, even the attorney general thing. So that is just, it happens all the time. It's a good question. We grew up in a small town in New Jersey called the Ranney School, very small school, both of us, 35 kids per class. We actually started our career similarly as I went to law school, actually, when I graduated college. And so he became a leading lawyer in the country. But I did start my career as an attorney. It turns out that along the way, because I'm old now, but this is back in the 90s, all of us were friends. He was 3 years older than us, but another one of our very close friends from high school, who's also become fairly well known, his name is Mark Laurie. He was my best friend. And, I actually didn't love the exact type of law I was practicing. And so in the late 90s, we decided to, along with another friend of ours from high school, Lax Chandra, to start a company online in the internet. It was the sort of beginning of the internet. And that is actually a precursor to the current business we have now. So that's when I got started. And ever since then, I've been an entrepreneur.
Awesome. And then, so you founded diapers.com. I think that was your big success story. Is that correct?
Yeah. So we started with a company called The Pit, which was a sports stock market and trading cards, which we can at some point talk about. And we sold that to Topps, the Topps company, the trading card manufacturer. This was in 2001. And then after I got married in 2005, 2006 is when we launched diapers.com, Mark and myself. And then we sold that to Amazon. And then actually, funny thing, Mark went on to do another commerce company called Jet that he sold to Walmart. I actually wound up doing media, including one of the ventures with my brother, who we just talked about, when we created something called Cafe. And that company, my brother and I sold to Vox Media, where he still works part of his time today.
And that was trying to monetize podcasts, I believe, right?
Yeah, it was, we had a lot of different things we were trying to do before we even got into the business model. The idea was we thought we could create, the best informative podcast around the law and news. And to your point about Preet earlier, I think he's He had never done that before, but many of us, including myself, thought he was extremely talented as a communicator with a sense of humor and very clear. And he had great voice for radio, face for radio too. And so, yeah, that was the mission. And then we wound up, in terms of monetization, there was ad reads, but we also one of the first companies, I think, that created a subscription for podcasts, which was very successful. And so we had the recurring revenue. And like I said, a couple of years ago, we sold that to Vox.
So as a successful exited entrepreneur, I guess multiple exited entrepreneur, what led you to want to take another bite of the apple? Do you think you're addicted to startups and that's the only place you can be gainfully employed, or do you see a niche in the market? Like, what kind of entrepreneur are you?
It's a good question. And I don't know if I have the perfect answer to it. I think it's been a long time now that I've been doing it. And I feel like I've learned a lot and I feel like I enjoy it. It's painful. I think you've been an entrepreneur yourself. And so I wouldn't have it any other way. Like, there's more excitement, the ups and downs of it, while painful, are also invigorating. And so having done it so many times over, and the challenges and the ups and downs, but then the sort of victories that you can get and creating something from nothing, the bonds that you create with your early employees. But I think I liked it a lot more than my previous, when I was a lawyer, my previous profession. But maybe there's other things I could do as well. It is kind of what I guess I've been doing for 25 years now. But when I reflect on it, I do think it's probably, despite all the sort of struggles of it that we all go through, I don't think I would trade it for anything.
Yeah. So pivoting to Mojo, why don't you introduce Mojo to the audience?
Sure. So Mojo we call it a sports stock market. And I think one way of doing this is to kind of go back to this company I described a little earlier, 20 years ago, like the origin of where it came from. So as I mentioned, after graduating law school as a lawyer, my good friend Mark Laurie and I and another good friend were big sports fans. We've always been huge sports fans to this day, and also have finance backgrounds, especially Mark. And so we thought it would be pretty cool to create a sports stock market, we were calling it, where the everyday sports fan could basically invest in athletes like stocks. This was some versions of this have been tried since, but I think we were probably the first ones, because this was about 1998, 1999. And very simple idea. It was like where E-Trade meets ESPN. This was before Robinhood and all of this, but the internet was taking off and it was in early days. And so we went to our lawyers and asked and told them about the idea and how we wanted to execute it. They said, that sounds like, if you do it the way you want, sounds a little bit like illegal gambling. And so we recommend you not do this. And so we created the next best thing, we thought, which was the sports card stock market, where we use trading cards as a proxy for the athlete. And one of the things that we wanted to do was make sure that the customer always had this liquidity, that they would always be able to buy and sell at all times, and that the performance of whatever they were buying was consistent with the athlete's performance on the field. So anyway, we built this whole thing and it was very successful, and we sold it to Topps, I think, as I described earlier. And fast forward 20 years to 2020, I believe. And Mark and I are still the best of friends. And, we've been doing all these businesses and had some success. And he calls me and he says, Vin, that idea we had 20 years ago, that sports stock market, I think it's the biggest idea we've ever had. Have you seen what's going on with the emergence of legalization, gambling legalization, and Robinhood and Coinbase? I think we can do it again the right way, not using trading cards, but do it under the new regulatory gambling framework. It's going to require a lot of capital, of course. We're going to have to hire incredible people, but we can do all of that. And so we got really excited about it. He had become close with Alex Rodriguez, the baseball player, as they were trying to buy the Mets at the time. And he introduced me to Alex, myself. There was another co-founder, and there is another co-founder named Bart Stein. He's another incredible entrepreneur. And he had bought that company while at Walmart, because he was the CEO of Walmart. So all four of us got together and we thought we would sort of resuscitate this idea of a sports stock market, a Robinhood kind of experience where you could, focusing on players initially, you could invest in them like stocks, but we were going to do it through the gaming laws. And this kind of emerged and evolved a little bit broader to say, why don't we just create a whole new gambling framework where all of betting can become like a stock market? And the cornerstone of it would be not just the UX and looking like Robinhood, but the backbone of the liquidity for the customer. We would be market makers. So we're not an exchange or anything. We would create the market and then guarantee to the customer that whatever odds they were getting, live odds they were getting, there would always be a two-way buy-sell price for them, transparent, a fair market value, and it would just basically, like you're basically betting on a game or on an athlete or whatever. It's just like it'd be stocks. So I'll stop there. That's how it got started. We wound up raising a ton of capital and launching in New Jersey, but that's kind of the premise.
So I used to trade stocks, and I built an exchange, and I've been around sports betting for a long time. But even with somebody with my background, I'm not quite sure what that means to buy and sell a player. So maybe could you sort of unpack the mechanics of buying and selling, and what's the underlying contract that you're buying and selling?
Yes, good question. So the very first product we created, again, goes back to this idea of how do you like invest in an athlete like a stock, to your point. And our view was we wanted to make it totally objective. And so basically it's a futures bet on an athlete. And we created the longest future of all time, which was a futures bet into a player's career using career statistics. So we set a line, and it's accumulated stats, not exactly fantasy, but doing something that was like similar to that. So you had a holistic view of an athlete. So it combines, for example, in football, quarterback touchdowns and receptions and yardage into this one stat. We set a line on that, like an over under of what he's going to achieve at the end of his career, his cumulative stat. And then because it's so far out, you can go long or you could go short that. You could take the over, you could take the under. But what's very important, of course, is that the liquidity that you can get in and out at all times. So you're not going to want to wait until the end of that futures bet, until the end of someone's career to exit. So the essence of it is there's always a two-way price, so that, let's say, for example, the price on Jalen Hurts last year before the season started, he was a little bit uncertain, quarterback for the Philadelphia Eagles. Might have been like 30. I don't recall exactly. But then that's like a projection. That's like the line, the latest line of where he's going to end his career. As he's playing better than expected, the line is moving. So that 30 wound up going to 40, 50, 60, 70. And the customer who had bought at 30 can sell, at that new price. So that's the key, is this idea of the cash out liquidity where you can both buy and sell and then track your value. So, if you had bought Jalen Hurts at 30 and then all of a sudden he's at 60, you're up 2x, you can instantly sell, you can buy others. So you have a portfolio. And so we started with this like long futures bet. But then what we started to do is, because we had all of the infrastructure to do it, and we're the ones making the market, no one's was going to make that market except for us. But we had to build all these statistical models and algorithms, a lot of risk we're taking. And we were now being able to forecast not just his career, but all the derivatives of the career, the season, the game, a month. And so we just started to create different future bets going all the way down to the game itself and individual stats. And every one of those future bets trades like a stock, in the sense that there's a line, it's moving in real time, and it's the latest projection of what that player is going to do. There's an over and under, but the key is that there's a fair market exit price for you that's very similar. That's sort of the bid-ask spread. We don't call it that in our market, and it's very, very tight. And so now, in the first quarter, and you're taking over 200 yards passing, there's a line, but then you can immediately, if he gets off to a great start, that value of that position gets up. You can sell at the same price that someone else is buying at, and it just works and trades like a stock, if that makes sense.
So to unpack that a little bit more, so you said he started at 30, he was healthier, he went to 70. 30 what? What's the 30?
So yes. Our career futures bet is very unique in the sense that we came up with a statistic, and in that example, it is, I believe, it's a cumulative statistic of his touchdowns, yardage. Basically, it's like a fantasy stat. It's like fantasy points, but it's for his career. It's a cumulative stat. And so in that example, when you buy Jalen Hurts, you're buying actually like the price is 30. And so you get one share at $30 as an example. And then, he wound up going to 40, 50, 60. When that was going up, that was his stat. His projected stat was going up, but that directly translated into the share price that you had bought him at.
So his stat, so it's like a combination of like how many touchdowns he threw versus minus fumbles, is it like that? And then that equals 30?
That was the projection of what we had come up with, because it was is basically cents, and we converted it to a stat. So yeah, it's a fantasy stat converted to a dollar price. A very intuitive formula that you see. But in essence, the intuition for the customer is just, looking at, it's the latest expectation of where the athlete's going to finish his career, and then kind of going long or going short. And then, of course, he's outperforming his projections. The price goes up, the price goes down, because basically the projected performance is changing, if that makes sense.
Based on this arbitrary metric that you came up with to approximate his performance.
Yeah.
Like you came up with some formula.
Yeah, that was what we did for the career, because we wanted to have this kind of holy grail identifier to represent the true excellence of a player. We wanted it to be broad enough that it wasn't just one stat. So we had all of our quantitative folks like back testing it over time and saying, and it's a good question you're asking, because it's the career bet now actually in our market is actually a smaller piece of what people are betting on. But at the outset, the idea was, man, if you wanted to truly invest in the career of an athlete, you want the stat to be reflective of his true excellence, not just one number. So we came up with 6 or 7 stats combined. And then we back tested historically, like all the players, like all the quarterbacks, and ranked them as to where they ended their career, and said, oh, this makes sense. Like this is, who's number one? Of course, Tom Brady. Who's, and you had all the other guys, Peyton Manning second, and all this. And so that's kind of how we did that career futures bet. When we started to introduce shorter future bets, it became much more traditional, like sports betting, where, hey, you know what? You're just going to basically take yards in the game. Very simple, right? 200 yards in the game. We set a probability on it, as to what the odds are. We don't use American odds. You can see the American odds on it, but we use a zero. At $1, you basically, you win 100% of your bet. At 0, you lose everything, and in between, the thing is trading during the game. So it's a little bit different with the career futures bet and everything else, but that was the idea.
I'm kind of a nerd when it comes to market microstructure, and forgive me for going deep on this, because I'm still not I still kind of want to get into the details, because every time I've read about your company and I looked for this information on the internet, and forgive me if it's out there, I couldn't find it, but like I still don't understand it from end to end, like what you're buying and selling. So basically, to summarize where we are right now, you have come up with an arbitrary stat that you think approximates the goodness of their career. Yes. You have a formula that says 1, 2, 3 equals this number, and then that's your points for the career.
Right.
I'm understanding that correctly.
Right. It's like a touchdown is 1 cent. Every yard is 0.1 cent.
Yes.
So we published that formula for you. That's how it starts. Yes.
And that formula is public.
Oh yeah, 100%.
That formula. So up until this point, he's done so many yards, so many touchdowns, and that equates to 30. At that one point.
So it's a good question. Every player. So what we're talking about now is if a player, he's kind of like in the middle of his career, right? So Jalen Hurts was a young player, but he'd already accumulated some stats prior to that. So when a rookie comes out he's 0, right? Meaning he has 0 accumulated. But what we're doing is, in terms of equating it to sports gambling, is we're basically saying we think in his career, as opposed to an individual game, we think that he's going to accumulate this many total points. And the points converts to dollars, right? That's a very simple thing. So we're setting a future, it's a line, it's a projection. But the career is the longest futures bet of all time, right? And so that's all that is that prior to last year, a lot of uncertainty around Jalen Hurts. And so we were looking at it and we're like, we were doing our calculations in terms of, how many touchdowns and yards and stuff, and using the formula that we published and putting out a projection of where he was going to end his career. But that projection during the career is changing at all times because he's playing. And so now I have to check the latest. I think it's like up 3x, like going into this year, the latest projection for his career, I should check it, is probably like over 70 or something like this. And
so what's he at? What's he at currently? What's his like?
Oh yeah, then you can look. Yeah, then you can look at his actual, how much he's actually accumulated, and I have to look at that, he probably is up around 15 or something. That's how much he's accumulated. It's kind of like, put it like this. Like, let's say, just take that exact example and make it like a game. The game's going on. The guy's projected for 270 yards is the line, like before the game starts. Now you're in the first quarter, okay? Let's say he's thrown for 70 yards. That would be how much he's accumulated. But of course, the bookmaker is changing the line. So now the 270 that it started with might be 290 or 250 or 300. And that's all that's happening. And the user can always enter the new bet, like in the first quarter or in the second quarter. But if you have a pre-existing position, because you got in at a favorable or unfavorable, you can get out. So we're basically always trying to give you the latest probability odds of what this event is going to be, and you can buy or sell at any given point in time, and that's how the market works.
So in the bookmaker example, it's basically a binary option. So if the line is 270, like you said, like they either hit 270 or you don't. Like it's a zero-sum game. But it sounds like what you're describing to me is not a zero-sum game.
It's like, because you're really smart and you're seeing the difference in the career futures bet. That's a very specific product, and these other futures bets. In the traditional sort of shorter term duration bets, we are making them binary.
So it's not a binary option. What is it? A contract for difference? Bet.
Yeah, it's not a binary bet, because what we will pay you at the end of his career. So if you held this contract, basically this bet, until the end of the career, there's a guaranteed payment where we say to you, hey, we will pay you this amount per touchdown, per reception, and all this. So that's your contract. So you buy it at a certain price, and at the end of the career, when the bet settles, we tell you this is what we'll pay you. And it's a formula based on statistical achievements, right? And so it's not binary, to your point. So for example, Tom Brady, we projected that he would have IPO'd. Of course, we weren't in existence at the time, but we think because if he was, a sixth round pick or whatever from Michigan, he would have debuted at like $3, right? A very small projection of what we thought, he was going to end his career with. He wound up finishing his career, I think, at like 180. So if you had bought at 3 and held till the end of his career, you would have made 60x. And along the way, right, there would have been a new projection, 3 to 50 to 30 to 80 to whatever. And you could always cash out. You don't need to hold it till the end. So that you are exactly right. That is not binary. That is continuous, we call it.
And what's your business model? Do you have a transaction fee, or do you just want to make the bid offer spread?
Yeah. So technically, again, it's good that you're asking the questions. We don't have a bid offer spread. We try to simplify it for the user so they don't see these two prices. So we charge a commission. In essence, it's a 5%, I believe 5% entrance fee. So when you're entering into your position, we take 5%. We take a commission. And actually, when you sell, there's no spread difference. So you can sell at the same price that you can buy. So we try to make it a little simpler, so customers, who aren't accustomed to bid-ask spreads and all this, are basically, there's just one price they see.
So if I buy $100, you're taking $5.
Right. At the outset, you get a certain amount of shares. Right. So let's say the share price is $10. You put in $100, we take 5% out. So $95 gets deployed and buys. The share price was 10, you'd get 9.5 shares. And now you're just following it. And when you want to sell, there's no bid-ask spread. You can sell at the same exact price that someone else is buying it at. Meaning, if the price goes from from $10 to $15, you just sell at 15. We wanted to take out the complexity of a bid-ask spread.
No, I appreciate that, but I mean, whether you're simplifying the market or not, you still have the market microstructure. Sort of, like I would say, you still have a bid offer spread. There's no difference between the bid and the offer.
Yeah, exactly.
Thanks for going deep into that. You said that was becoming a smaller part of your business. What's becoming a bigger part of your business?
Yeah, so what was interesting was that's what we launched with, and then what we were finding was that customers, even though the futures bet was so long, we keep the market open during the game. And during the game, so we just launched, by the way, we were not even 12 months old. We launched in New Jersey in late September of last year, just in the NFL, just on this one career futures bet. And what was happening was that most of the action's on Sundays during the game, and small movements, and we had some juicers and stuff. And so it became quite clear that the more instant gratification, shorter term durations was going to be a little bit more popular, less differentiated, I would say, in some sense, because you can't find that career bet anywhere else. And so then we started to offer shorter term bets come January with the NBA. Once we started launching the NBA in February, we started launching bets during the game. Like just now it's just like player props, binary ones, like you said, point totals. We started doing team bets. Those are also super volatile and maybe even more familiar in some sense. Those have overtaken by an order of magnitude the volume on the market, like versus the career.
So do you think, do you do traditional sports bets? Like, can you bet money line on so and
Yes.
so? And
Yeah. So
okay.
we've introduced that. All of that's come in the last 6 months in baseball. Now we just added run lines and doing totals. For the football season, we'll have all of it. And that's a different, like you said, we make those binary, but we structure it, like a stock market, like kind of the UX and everything.
And with the sort of the more, I guess, traditional sportsbook stuff, do you have a bid and offer for that, like a two-sided quote that you can buy sell throughout the game?
Yeah, so we don't again call it effectively. It operates like a bid-ask spread, but what we do is the cash out price. It's usually about 2 to 4 cents lower than the price that you can enter at. We don't say that. We basically, because it's all in share prices. So, for example, if you get in it, if the current price is 60 cents, and that's what you're seeing. Usually, when you want to cash out, you can cash out at like 58. 50. It depends on the game. You're probably this is much more familiar, probably in some sense. Again, we're trying to always simplify and just kind of give them that sense that like the way we explain it is that the cash out price is usually a couple cents lower than the price you're seeing that you can buy. But we make it all transparent. I don't think you see that in a lot of sports books where it's very cloudy in terms of how they're coming up with your cash out price. You don't really know what's going on. At least I can barely tell. You don't know if it's fair or if it's not fair. And so
it's not fair.
Yeah, it's not fair. So it's harder.
Telling you that right now, it's not fair.
Yeah, it's very transparent on it. You can see it, and you can see exactly what the fair market value of your position is, and you can just kind of do the math, and it's all right there in front of you. And we think that that's very important.
So one of the things I like to ask founders is like, what's the why of your business? So I think you kind of teed it up. You were a bunch of high school guys that were close buddies, and you had this vision to kind of trade sports. Like, are you doing it because like what's the why? Is it like, this would be cool and I really want to put this? Do you think like customers are missing this? Do you think traditional sports betting is boring? What's your vision for what's missing in the world and why Mojo solves that?
Yeah, I think first and foremost, putting aside competition or anything else, the reason I'm in it, and I've done a lot of different companies. This is an entertainment company. First and foremost, we're here to provide entertainment and to provide, like in the best way we can, and to make life a little bit more fun. The reason I'm a sports fan is because I know how hard it is. Like my job's hard, and whatever. When I had little kids, they were screaming around. So we're an entertainment company. So our job is to provide entertaining products to make people happy and give them a break from what can sometimes be complicated life. So that's like a high level. And that's what before doing this, I was in media, and that's what those companies were as well. Preet's company, the one I did with Preet, was a little bit more about information, but I had an entertainment media company as well. And so that's the sort of North Star of why we exist. Then when you look at the space, and then just as an entrepreneur, and you look at like, why do we exist? Like maybe there's already enough entertainment. I do think that what we're doing is a little more entertaining because now, and you can see it in some of our numbers with the stickiness, especially when you're trading the game, it's so transparent, and it's the game. It's you can see the volatility of your position and the flexibility of being able to get in and out at all times as the game's going on, and to have it all reconcile in a UX that's very intuitive. I think supercharges what it's already, I think, a fun sports betting experience. Like I do think sports betting on DraftKings or FanDuel is fun. I used to do it, I just think it is a little confusing for a lot of us. And I really, really like during the event, whether it's the career, the season, or the game, I like to be able to sort of make calls and change my mind and then act on that in a way that's quick, easily processed. And so I think we bring that. And I think it's very, very different than anyone else.
So if we pivot onto the conversation, if we pivot to the competition, do you think of yourselves in the same pool as sports betting? Are you in the sports betting industry? Are you sports betting adjacent? Are you trying to move sort of traditional sports bettors over to a more innovative thing? Or are you trying to bring new people into a new mechanism for sports?
Great question. I think it's all of it. I do think that there's no question that we're in the space, we're regulated as a sports betting company. And so there's no denying that they are competitors. I think that at the same time, by offering what I think is the most differentiated experience, both because we have products that nobody else has, including that career futures bet, and then offering these other shorter term bets in very different formats, makes it so differentiated that I hope that it brings in other users that may be intimidated by the complexity of a sportsbook. I get how sportsbook, I get how all the odds works and everything, but a lot of folks, especially younger folks, don't. So yeah, I mean, the vision, of course, is to both compete within the existing demo, but then, of course, bring young people in or other folks that just feel like this is way more intuitive and, again, more exciting.
I still find sports betting confusing. I've been in sports betting 15 years, and I literally have to get a calculator out. If you bring out American odds, I'm just like it still looks like Greek to me. It's interesting. You said you're all about entertainment. I would say like I'm the opposite. I created my company for financial utility.
I would say, by the way, just to kind of interject and elaborate even one other thing in terms of the competitive market, because we spent a lot of time on that career futures bet. And the premise, one of the reasons why we wanted to create it the way I was describing it earlier is, having been in the trading card market for a long time, the flaw we saw there, very similar. A lot of customers were like, oh, I'll take this rookie and I'll try to invest in his career because I think I can predict sports. And we were in it for so long, and we created that whole sports card stock market. The flaw there was that it wasn't objective. So it wasn't based on statistics. And as a result, what you see still today is, and even in these NFTs, is you see folks that will pick buy a card or an NFT of an athlete thinking this guy is going to do better. His performance on the field is going to, do better than what the public thinks. And they think the asset's going to appreciate, but it doesn't a lot of times because all these other factors are in the way. And so you see the NFT market crash 80%. The trading card market consistently booms and busts, and you couldn't take the idea to the customer is, you think you know sports. If you know sports, you're going to win money if you predict right. On the careers of an athlete, it doesn't work that way in the trading card or NFT market, which we thought was the flaw. So we were saying, okay, let's make this more objective, put it on stats. By making it stats, it actually becomes, we think, I mean, it's so debatable, but we decided to go the regulatory route for a bunch of different reasons, to inspire confidence in the market, to ensure that there was reserves and all. And so that there's a whole thing in here, which is, in the long run, you could see a massive market that is taking folks from the collectibles and the NFT market. They're not really bettors. They are that kind of demographic that we could also play in. So we've just had to focus and priorities and stuff. And we started to see so much action on the game bets that we've really doubled down on that. But we are always intrigued, and there's a little bit of a romanticism on the career futures bet. And I think it does intrigue people a lot because there's just nothing else like it.
What's next for you guys?
Yeah, so we're heads down on the football season, as probably everybody else is. So it's adding a lot of selection. And the biggest thing we're doing is the limitation we've had, from an audience perspective. We've really been working with this pilot audience. We're just in New Jersey. It's extremely challenging, as you can imagine, to try to market like that. It's only 3% of the population. So we are debuting, and I just got a demo of it, a sportsbook meets fantasy version of our market that we will be introducing to about 50% of the population, about 20 states, I think, in the next few weeks. Like, we're hoping to submit. It's a new app, but it's taking our exact market and replicating it, but gamifying it. I can't get too much into it because my head of comms said, don't get too much into it because he wants to, splash it out in a few weeks. But stay tuned for that, which we're very excited about because it gives us population availability that we haven't had. And so I want to see, when I get a lot of people trying it across the country, do they like this thing?
Awesome. Before I let you go, what do you want to be when you grow up?
Yeah, so your producer mentioned this. That got you, Dick. I was thinking, like, what was I going to say to that? And
That's supposed to be a research question. It's supposed to be
I
your
know,
gut
I didn't have
emotional
time.
response.
I didn't have time to think about it. What do I want to be when I
What's the
grow
first
up?
thing that came to mind?
I know, it's weird, and this doesn't make any sense because I think mostly about like my family, like, and I think about my kids who are 18 and 16. So I think about like something about that. I don't even know what that means, but I think more like less professional and more like that, when you go down at the end, you want to be like a good dad and all that stuff. But they're already, hopefully I am already. I don't know. So it's, I'm not sure how to translate it, but I go less onto professional for me at least, and more into like, what about outside of work? What do I want to be,
Good
Maybe
dad
some.
is a good answer. There's no wrong answer. So I like that answer.
Can I ask you? I'm sure you've answered before. What do you want to be when you grow up?
In second grade, I wrote that I wanted to be a professional baseball player or the president, and I still kind of want to be a politician when I grow up. That idea kind of sits in the back of my head. We'll see if I get there. It's such a blood sport getting into that, and you have to drag your family through all that kind of stuff. But maybe politician, maybe another entrepreneur, something like
So
that.
if you did, I mean, it's your show, so I need to ask you questions. But like, so if you went
No,
to
no, no.
political, I'm just curious. I knew as an entrepreneur, Andrew Yang was a friend of mine prior to him going into, running for office. I always thought that was really interesting. And you obviously an entrepreneur as well. If you went in to politics, would you be going in one of the established parties, if I can ask, or would you be kind of trying to navigate your own way, or how would you think about that?
I haven't thought that much ahead. I mean, I do think the United States needs a viable third party. I think part of the degradation of our political, normalcy is because we have the binary options, and it doesn't really teach people to think for themselves. But the way this thing's set up in America right now, it's like I have a hard time seeing how like you can have a viable third party, But I would like to see a third party in America, but I haven't thought that far ahead.
Yeah, no, and that's Andrew. He did it right. He's got the Forward Party. I'm not sure how well he's doing. But I know I think he's making some inroads, but I tend
It's a
to.
good idea, and to your point about Andrew being an entrepreneur, I do think that we have way too many career politicians, and I'm much more of the maybe not become a farmer like Thomas Jefferson kind of proposed, but I do think people should have multiple careers before they go into
I like that.
politics and not be professional politicians.
It is funny when they start young and end old.
Like Mitch McConnell, he's been in the Senate for 300 years now. Like it's not good for anybody for these people, or Chuck Grassley or Feinstein, or like these people just like it's too long. It's too long. We'll see. We'll see. It's I think about the effect that I have on my family a lot, and that it might be enough to keep me out of it. But I love politics. I'm obsessed with it.
That's great.
Cool. Well, thanks very much for joining on the podcast, and best of luck with Mojo. It sounds like you guys are off to something super interesting.
Thanks so much, Jason.
Okay. Cheers.